Amazon has been a very powerful growth stock. Had you just invested a simple $10,000 in the company on January 10th, 2003, and held it almost to its peak in July of 2021, you'd have turned a mere $10,000 investment into over $1,600,000. But that was before the stock price has fallen. Nevertheless, if you invested that same $10,000 on January 10th, 2003, and held it till Friday's closing price, that $10,000 would have grown to $915,000, or still almost $1 million. And that's after this precipitous drop. But as you can see by this fast graph, Amazon has not been a great earnings company, but it's been a really great growth story. Hello, everybody. This is Chuck Carnevale, co-founder of Fast Graphs, the Fundamentals Analyzer software tool, aka Mr. Valuation. Back as you could see on my video in October of last year, I did a introductory video on Amazon as a growth stock. I know some of you are kind of shocked because I normally write about dividend stocks, and I still like dividend stocks, but having a little growth around is not an all bad thing. But things have changed a little bit since I wrote that article. When I did that video last year, let's take a quick look at it. Let's go ahead and go into the video. I did that video on October 14th, 2022, and Amazon had closed at approximately $107 a share. If I look at it today, it's trading at $97 a share. So let's say the stock is down, $10 a share from that. But in the video I talked about, and I'm going to put a link in the video so you can go to the video, I talked about the fact that Amazon has not been a necessarily real profitable company, although it has been profitable at times. It's also had a lot of trouble, generating earnings. And my argument, the reason for that is primarily that this company has been, especially under Bezos when he was still running the company full time, it was strictly a growth story. Okay. And that growth can be seen by taking a look at its revenue metrics. As you can see, revenues have been steadily growing, and I want to point out they've been growing at double-digit rates in 2022, and they're still expected to grow at double-digit rates going forward. The estimate average growth rate over the next couple of years will be about 11.3%. The long-term growth they expected to be over 22%. Okay, now this is done by a lot of analysts. There's over 48 analysts giving a forecast for 2023. Now, I do want you to notice that the estimates have gone down a little bit. Okay, they were like $58.83. Now they're saying, $54. And what we're looking at here is revenues per share. Okay, and then we're expecting $61, but it was $67 6 months ago, but now it's $61. And it was expected $74 6 months ago, and it's now down to $69. Now, obviously, there have been some issues in their growth. And if we look at the company from a standpoint of operating cash flow, which is how I always suggest you look at Amazon, you can see that the company did have a precipitous drop in cash flow in 2021. However, that was following a huge growth of cash flow in 2020. Cash flow increased by over 70%. Let's shorten the time frame so you can see this better. Okay, then it dropped by 31%. But if you were actually looking from here to here, the company was still growing and expected to be a rather flat operating cash flow growth this year. But then it's expected to grow at 68%, 28%, and 26%. Now, when we're looking at forecasting, that's by about 20 analysts making these forecasts for future growth of operating cash flow. But here's the big key, and I'm going to expand this out to about an 18-year graph. Amazon has not been a real profitable company because they've been, investing in itself, so to speak, to continue to fund its growth. And they are having a little blip in growth. But if you've followed the news, the company's laid off like 18,000 people. From what I can determine, that's mostly white-collar people. But anyway, the point I want to get at is when I put weekly closing stock prices on this graph, you can see how operating cash flow growth rate of 27% has created a price to operating cash flow multiple of about 27. That's been the normal or average multiple of this company based on operating growth rate. You can now buy it at around 19.7. Now, the company is expected to have accelerated growth again, and we're starting to see a little bit of recovery in the stock. But I do want you to notice how closely, I'm going to expand this out more, how significantly important it is that the company's stock price is driven by its cash flow. Here we're using a 31 price to operating cash flow because that was the growth rate over this time frame. Notice as I change time frames on fast graphs, you get different perspectives here. Now, having said that, one of the messages I want to get across is I believe the most important perspectives are to look at the last 4 or 5 years. So in this case, when I've got 3 years of estimates, there's a lot of people forecasting it, I go back and look at Amazon over a 12-year period. This has given me about 9 years. The company's been growing at about 28% a year. So when growth is above 15%, I'm applying a PE of 28. I want you to understand that, and I want you to be aware of that, because if I go back to a maximum growth rate, we now have a PE that's being drawn on this graph of 30, which is where we max it out at. Okay, so all the PEs here, if I can hit them, let me take the price off the graph. All the PEs here are 30. So this is using a maximum graph. I shorten the time frame, the PE drops down to 26. The reason I say that is because when you look at the price, I call this a tool to think with. You're analyzing what's going on here with Amazon. And 26 times cash flow has really not been a bad valuation. Right now you can buy it at 19.7. But I want to talk about what's going on. The stock price is down a little bit from when I first wrote that article in October of last year, where we're looking at around 106. So I'm hitting it pretty close there. So the stock has fallen a little bit, but it hasn't been long enough to worry. I've made a long-term call on this stock, and I'm still making a long-term call. I think if you're looking out 3 to 5 years, this is a great time to be buying this growth stock at these prices. That, to me, is the real key. And operating cash flow is expected to recover dramatically. The other point that I want to get, emphasize in this video is that, revenues have continued to grow, and they've been very, very consistent. Now, going to Zacks and doing some research, just a couple of brief highlights of what Zacks feels about Amazon. Zacks, in their summary, they pointed out that Amazon is gaining on solid Prime momentum. Their Prime primary store where they sell product, and, the ultra-fast delivery that they've always given, and the strong portfolio, and the fact that they're strengthening relationships with third-party sellers are all positives. Zacks also says, additionally, strong adoption rate of the AWS is aiding the company's cloud dominance. And, Amazon's cloud services have been really powerful, and they're helping Amazon in gaining further momentum. But now the company did lay off some people, okay? Its online retail business revolves around the Prime program for sure, but it's well supported by the company's massive distribution network. Just so we're clear, this is all from Zacks. And Zacks went on to point out they also enjoy a dominant position in the cloud computing market, again, with Amazon Web Services, AWS, which is, one of its highest margin generating businesses. And so that's, really helping them. And even their Alexa-powered Echo devices, artificial intelligence, is helping the company sell its products and services. So this idea that Amazon is dead, I believe, is really greatly over-exaggerated. I do think Amazon was selling at premium valuations over the last 3 or 4 years. I think this basic correction brought it down to reasonable numbers. And, the correction here, and I'm not going to hit it perfectly because it's a little difficult, but, we've had about a 45% correction in the stock price, even though, Amazon is still delivered. Even if we're looking at this short time frame, looking at Amazon's performance, it's done more than double what the S&P, Spider ETF has done. So, the stock has been a powerful growth story, even when it's kind of on its tail here, even when it's already had a major correction. Point is, we've now got a good entry point. If you're looking for growth in your portfolio, I think Amazon is a great choice. Their revenues are still strong. Their operating cash flow is expected to recover very strongly. And this is kind of a reversion to the mean, because I'm going to pick a spot. I always have to go off a stock price here. So I'm just going to draw a line on this graph. And I'm going to draw the line out to here, okay? This is kind of a reversion to the mean line, all right? Amazon had a very strong, 70% growth rate here. That led to a dropping, but you can see they were still growing. Operating cash flow was 382, and now in 2021 it was 450. It grew by about 2% in 2022, but it is expected to have an extremely strong recovery this year. But this is more of a reversion to the mean. So Amazon still has, I think, a lot of growth in it, especially if you're looking at cash flow, and especially if you're looking at it from a perspective of revenues. this is a great time. This is a normally 2.5 to 2.6 times sales stock. You can buy it at 1.9 times sales. Company's double A rated, has very modest debt. It's generating, huge amounts of cash flow. I would say if you're still looking for a growth story, Amazon's it. But I do want to make something clear. Growth is always riskier than investing in dividend stocks. But if you're buying these at reasonable growth stocks at reasonable valuations, you at least are putting, the company's growth into your pocket. You have an opportunity to participate in the growth. If you overpay for the stock, even though the company might still grow, you're not going to be able to participate in the growth. Anyway, this has been Chuck Carnevale, co-founder of FastGraphs, the Fundamentals Analyzer software tool. This was a subscriber request, said Lee should update Amazon. And I do think it was worth updating since we had this little blip, in sales. But remember, Amazon is laying off a bunch of people. They're doing things to get themselves back into profitability. And I would not be one that would want to, knock this company out. This company has really changed the whole dynamic of retail since they've been in business. So, it's got some risk. I think the entry point here is very attractive. And I think when I wrote about it in October at around $106 a share, where it's around 96 or 97 now, I think that'll turn out to be a good long-term investment. But obviously, as the stock has fallen in value, even though fundamentals have not really deteriorated, significantly further, I think the entry point now, if you bought some back then, add the some now. If you're a long-term investor willing to hold it over the next 3 to 5 years. Anyway, this has been Chuck Carnevale saying thanks for watching. If you enjoyed this video, give me a like, subscribe to the YouTube channel, if you will, and take a look at FastGraphs. There's so many ways, this tool can help you make smarter investment decisions, especially if you use it the way it was meant to be used. And as I pointed out, we're testing international stocks right now. We'll be launching that. There's all kind of new metrics we're going to be adding. So, we're constantly trying to build a better FastGraphs so that you guys can make better investment decisions. Thanks for watching. And I'll be doing my regular videos tomorrow. I'm going to feature one because I do want to talk a little bit about this reversion to the mean concept a little more. Thanks for watching.